Hello again, everyone, and welcome back to your daily currency recap. This is Ankit here, and let's begin the market coverage. It's already a Tuesday. It was a holiday shortened week this week, so hope everyone had a good long weekend. Now let's get back into the routine, take a look at the markets and see what's going on, and take a look at a broader analysis, take a look at what's going on, what's moving the markets, take a look at our currency basket, see what's really moving, and then bring it down to possible setups. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So getting into our market analysis, let's just jump right into the headlines first. I want to just jump into see what's really moving, and you can see on the news of the day, the equity markets did pull back off that resistance level. Remember, we closed the week on a strong note on a Friday. Monday being a holiday, Tuesday market opened up, but we did not see a break. So again, we are now in this little range bound price action where until we get that break, market likely to go back and forth. Now, the change in the currency market is where the US dollar did break out of that range. We'll take a look at it. But you got to notice that this happened along the lines where yields are also strengthening at the same time. So we're seeing the correlation continue to play out. We'll get into it in detail as we get into the charts. Now, let's take a look at the numbers. The market performance today, let's take a look at what's happening in the currencies. You can see that the dollar was the big one today, 0.91%. For the last few days, again, the first week of this year and this month, we saw a nice move, nice recovery in the dollar. And then we saw dollar went sideways for a week. So we are starting off a week with a breakout, nice strong breakout, 0.91%. And that was really across the board, the best currency pairs to be in. Pairing against the Aussie and the Kiwi, they were weakest. We talk about how we do not like the Aussie and Kiwi. They have been underperforming, and so will be the case. As you can see, everything else kind of right in the middle, Euro, Swiss franc, pound, and CAD. So none of those currencies are breaking out. But we are seeing the Japanese yen underperform. And especially when the dollar is strong, the yen is likely to lag and struggle. Back if you take a look at the markets in November and December, dollar yen was a great trade to be on the short side because dollar was weakening, the yields were falling, and so was the yen was gaining from that. Now we're seeing the opposite. So you got to really take a look at the dollar here and possibly, what's really moving here, Aussie and Kiwi. But we also need to pay close attention to the middle basket here too, especially the European currencies. So that's really what's moving. As you can take a look at the overall broader markets, the S&P was down 0.56%. VT is down minus 1.11%. Crypto is still doing well. Again, after pulling back on a Friday, we are seeing a little bit of recovery there. And you can see the oil and gold is down. So today was a bit of a down day across the board. Now let's take a look at the crypto markets. You can see Ethereum was doing the best. The Bitcoin Cash and the Bitcoin, even though they gained, if you take a look at the chart, they're just recovering from some of the losses here. And we are seeing the Litecoin being the weakest. So the crypto markets, again, doesn't look like it's weak. But at the same time, we got this capitulation move just last week that we have to see which way it was really break out. Now, let's take a look at our outlook. So we're sitting at about +2 in the markets. I know as we ended this week, I think I was looking at more +3, but I've brought it down to a +2. Let's take a look at the chart. As you can see on the chart, we have a clear level of resistance. And this price rolled over really nicely against that resistance. So this is why we always talk about the confirmation, the breakout pattern. The breakout pattern is where it does break out, it stays above, and has a continuation. You can see that in this case, there's no breakout confirmation as of yet. We're pulling back. We are right at this 20-day moving average. So at this point, I won't be surprised if we can go a little bit sideways until we break out one way or the other. So that's really where we are at. We're bringing down the bullishness here. Until we can really break out, let's just expect a bit more sideways price action, a bit more back and forth. Now, Taking a look at the schedule, as you can see, last week was a much busier week on the economic front. Now this week we started off with the employment report out of UK. You can see that was the numbers were a little better than expected. Now if you take a look at the CPI, now CPI out of the Canada was a little bit surprising one. You can see the median CPI was stronger. We were seeing the trim CPI was a little stronger, and I think that's really what we're seeing here. We're not seeing the inflation number falling as much. You can see the Empire State Manufacturing Index out of the US was negative 43.7 versus 4.9. So a little bit of mixed numbers here. Again, economic wise, the US number was weak, but then CPI wise, the Canada's number is not as weak. So again, this is where the whole game kind of comes back in play, what the central bank's going to do. And at this point, if this inflation stays strong, it really gives less leverage for the central banks to sort of cut rates as the market is betting right now. Overnight, we have 9 p.m. Eastern Time, industrial production out of China. This number usually is important as it really moves the market. But lately, I've not really seen a whole lot of fireworks. So something to keep an eye on. If nothing moves on it, that's fine. Now, that's where we're going to take our focus to tomorrow. We have the U.S. retail sales, which is, I think, it's important right now because that really tells you the condition for the consumer, and that really affects the economy. We have the Aussie employment report tomorrow night as well. But mostly, we're going to focus on the Australian dollar tomorrow and also taking a look at some follow-through moves in this U.S. dollar. So let's take a look at our currency analysis and see what's really moving as far as the velocity goes.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, in our velocity scoring system here, as you can see, Aussie, Kiwi, and Yen, they're doing the worst. And you have to really also consider where the trend scores are. So let's just go back to the trend score that we had. So trend score wise, Yen is weak, velocity is weak, and Yen is weak. So they're all moving along the same lines. Aussie, trend score is weak, and so is the velocity. So they're all moving the same direction. And Kiwi, even though it was just a +1, it's moving lower as well. So they all kind of match with the trend score. Now, the in the middle here was the USD and CAD, and it looks like the dollar and CAD is now moved to the right with this breakout. So again, there's some shifts happening as far as the trend score goes. Now, let's get back into our velocity score. You can see that dollar is sitting at +3, very strong price action. We have to continue looking at more to the dollar long versus the dollar short because we are seeing a breakout to the upside. And that's exactly what I was waiting for. Is after the consolidation period is over, either prices will roll over or they will break out, and they're breaking out. Canadian dollar likely to benefit from it, but remember, CAD overall is not doing much. Swiss franc, pound, euro, they were at a +1. So the European currencies are right in the middle. We don't want to touch them until they really start to underperform. And right now, the only place we can underperform is some of the Aussie and the Kiwi and the Yen. So that's really where we are at. Let's jump into our possible trade setups and take a look at if we can find a good setup for the next 24 hours. Now, let's just start with the setup here, and I just want to take it to the US dollar. So here's where we were at, US dollar. You saw the first week. Again, let's just go back a little bit here. You can see how nice this trade was for November and December. And this is why I put a lot of emphasis on making a shift when the markets are shifting. This was a nice trade to the downside. You can see a 13-day EMA has worked really well. The exponential moving average I like to use here is doing well, and it gave us a signal where it broke out, and it just pretty much went sideways for this part. So I said that where if it doesn't matter which way it breaks, this is that upon confirmation is where we're going to follow that direction. You can see we got a nice breakout to the upside. So the trend score has now improved. Now, based on this, I think I like to be more on the long dollar side than the short dollar side. It's clearly not falling as it was November and December. So if that's the case, take a look at the Japanese yen. What the Japanese yen is doing? It went sideways for a little bit, and now it's falling. There's a little bit of rally here. It's going to fall here. So at this point, I like more yen to the downside than I do to the upside. Now let's take a look at other currencies. The Swiss franc, going sideways. Like I said, some of the European currencies are not really going anywhere. Let's just go back to the CAD. Well, CAD, you can see, it's still range bound. So not really getting a breakout. Maybe the next 24 hours, we can perhaps take a look at some of the Canadian dollar pairs just in case. But you can see a day like today, a hotter CPI, it did not move the CAD out of that range. Now the Aussie looks weak. You can see Aussie was strong and it's turned lower. So at this point, I only want to take a look at Aussie on the downside. And so is a Kiwi. Kiwi has been going sideways. It hasn't really broken down yet, but as it really starts to break slower, we will start to follow that direction. So again, we're pretty clear on what we're looking at. Let's take a look at Aussie USD. And you can see the Aussie USD has rolled over very nicely here. Exponential moving average was above. It kept moving up for both November and December. Now that thing is moving lower. So at this point, the daily is confirming to the downside. Now we can go into the lower time frame to confirm, sort of the pattern and the break. So you can see that we've got a nice little low base here. We break lower. So at this point, either a bear rally or a basing setup to go short again. Same thing goes with Kiwi dollar. Kiwi dollar is doing the same thing, went sideways. And remember, this is the period where I was saying, hey, let's not go aggressive here. Things are not going anywhere. When things are out of that range, it's much easier to trade. And now we're going trade on the downside here. So at this point, maybe a little bear rally. But remember, those bear rallies likely to roll over. And those will be good entry points. So Aussie dollar, Kiwi dollar goes on the top of the list. Let's also take a look at dollar yen. And you can see dollar yen's moving nicely as well. I know this was a nice little downward trend here, but you can see right now it's moving to the upside. So same thing goes. Look for bases to go long, either an hourly chart or 4-hour chart. We have nice bases to go long at. I mean, we are again in a very nice tight base. And remember, these bases are great. The tighter the bases, the bigger the breakout is. So at this point, if I really have to take a bet, I really like this basing here. Remember, this is on an hourly chart. Let's go on a 4-hour chart. Well, it's sitting right here. So maybe I can use the entry as an hourly chart. Like the setup here. On the daily chart, you can see we can easily get towards that 150 area because right now the direction is turning higher. So those are the setups that I'm looking at. Outside of those, if you want to branch out to something else, if there's further continuation with the CAD, Aussie CAD looks like wants to go lower. And let's take a look at Kiwi CAD. Kiwi CAD looks like, sideways, but it could potentially go lower. So those are the areas that I really like in the next 24 hours as we progress through this trading week. And as we take a look at our market, conclusion, again, we have this market bullishness confirmed, but overall, we might be turning into sideways price action. Yen looks terrible. Aussie looks terrible. Kiwi looks terrible. Let's pair things that are moving. Aussie, Kiwi, dollar, and maybe CAD. Outside of that, European currencies are right in the middle. So let's just keep a close eye on. And remember, as soon as you get a confirmation on those currencies that are breaking out, that's the time to get action. You want to avoid the sideways price action, and you want to jump when things are breaking out higher or lower. Thanks for joining. We'll see you guys in the next update. Happy trading.